Hi, I'm Phil Grande at philsgang.com. You know, everyone believes that we're going to have a soft landing, that everything's going to be okay. And I've been trying to educate my gang members that it's not going to be okay. It will be if you know how to sell a stock short, because we're going to have a brutal crash, but nobody wants to believe it. People believe that, hey, we'll just get bailed out again, like in 2009. They'll bail us out. They always do. After all, the Silicon Valley Bank got bailed out, their depositors, and First Republic, they got bailed out. They were uninsured, so they're just going to bail us out. No, that's not true. Let me explain what's going on. How many times have you heard where they said, the Federal Reserve, we have a target of inflation that's 2%. We don't go beyond that 2%. Well, I probably heard it 1,000 times myself. So, but think about what they're saying. They will not go beyond 2%. Well, wait a minute. We are well beyond 2%. The hell, we're at 3.67%. That's way beyond 2%. My book. So how do we get there? And how do you turn this around? Well, you can't. Yeah, let me explain. If you go back to 2008, look at my chart here, 2009. After the market crashed 2008, in 2009, they decided to do quantitative easing, QE. Now, QE means they print money. And with that money, they go and they buy 10-year treasuries so they can get the yields or interest rate down so they can, again, bail out the banks, bail out the economy by making attractive 30-year fixed-rate mortgages. The Federal Reserve then takes their interest rate and lowers it, make it attractive, so businesses will start. And, and existing businesses start expanding and take that money and put it towards business investment and all of that with attractive rates. So that's called stimulus. That's called QE. Some call it a bailout. But you got to understand, back in 2009, their target was 2%, but inflation was less than 1%, 0.36. So when they were printing all this money to buy the 10-year treasuries and to get the short-term treasuries down and print, remember, when you print money to buy the treasuries to do QE, that's inflation. To try to get those rates down, that causes inflation, all that printing of money. So they kept their eye on it and said, well, let's just make sure we don't exceed 2%. So they started out at 0.36%. And towards 2015, all of a sudden, Aunt B turns around and says, whoa, wait a minute, I better start raising rates. Inflation's starting to go up. We're starting to get well beyond that. We're heading towards that 2%. In fact, inflation's already doubled from 2009 when they started to print to 2015. And that's where they should have stopped it, right there. But no, because remember, the problem with when you try to stimulate an economy, not using business investment, but stimulating an economy through low rates, what you get is a quick growth, but you get a lot of inflation with it. When you Instead, if you try to grow your economy through productivity, inflation, it's very little inflation. It takes longer. But remember, these guys didn't want to take time. They wanted to get rich right away because that inflation of that printing money to bring interest rates back down to zero was making the richest 1% very, very wealthy. Pelosi, all these people in Congress, they're getting very, very wealthy. The more inflation, which is all the printing of money, the more their vineyards went up, their artwork went up, all their assets were going. They were happy. So when they got to 2015, they should have stopped, but they didn't. They said, let's keep going. because we're getting very, very wealthy off the back of Main Street. Well, where are we today? Well, they said their target was 2%. Okay, so right now, inflation's at 3.67. Wait a minute. In 2009, when inflation was at 0.36, remember the 10-year Treasury was at 2.2. Very attractive to get a mortgage, right? Well, guess where we are today? Okay, 10-year Treasury today is at 4.51. Mortgages are at 8%. Our economy's coming to a standstill. Stagflation. Also, remember, this 3-month Treasury right now, today, is at 5.49. As going back to 2009, okay, that 3-month Treasury was 0.2, almost nothing. So what has to be done? Someone's got to stop and say, stop raising rates. Because the more you raise rates, the more the dollar keeps going up and more the economy's getting killed. We're not growing. We just got some numbers this week. Manufacturing's in trouble. Everything's in trouble. So someone's got to say this. Stop. No more rate hikes. We lost. See, they've been lying to us saying we've been beating inflation. They know we haven't been. Now they got to say, let's stop. We lost. Now, what happens when you do that? Well, then all the Europeans who've been buying this dollar going up, because remember, the dollar follows, okay, the yields. Every time you raise rates, you raise interest rates, you raise yields, the dollar follows. To get this thing back under control, you got to get the dollar back down. So the minute you tell everybody we're not raising rates anymore, yields aren't going to go up anymore to fight inflation. We lost. Then guess what happens? The dollar tanks. And what happens? The market crashes. Gold goes through the roof, which is the good news. So if you know how to short, you're going to make money with the dollar, with the market crashing. You're going to make money buying gold, especially miners. And then they're going to have to finally go through the pain of a recession. But if they just keep going like they are, they don't want to face any of this, and they're just going to let interest rates keep going up because they won't admit they lost the war with inflation. Things are going to get really rough. So that is the truth. So when you hear we're going to have a soft landing, no. Now, one thing, when they say there's not going to be a recession, they're right about that because we skipped that. We're right into stagflation. So that's what's going on. So I've been encouraging my members and all my followers. And by the way, I hope you subscribe and like. I'd love to have you be one of my followers. And I'm encouraging them to learn how to sell short. Because this is going to be a rough ride. But not for us, because we know exactly what to do. Selling stock short. There's no way out of this. But no one's being truthful. So that's about it. So I'll see you on the charts. And again, please hit like and subscribe.